G'day there, welcome to the Alpha Wave Trader week ahead analysis. I'm Murray Dawes, and we're going to have a quick look at the ASX today. I've been having a look at the S&P, of course, over the last month or two, and the ASX 200 tagging along behind whatever the US does. But interesting to have a look at where we are, because it is getting pretty close to crunch time for us. Decisions on whether we are really going to take off to the upside or hit a wall of selling. I just wanted to take you through how it all looks from an education perspective, so you can understand how we look at things, and also just to point out, where some good opportunities might lie over the next few months. If I give you the just very quick overview of our market, this is a quarterly chart. So every bar that you see there is 3 months trading. This goes back to, you can see, the year 2000. So we've got nearly 20 years of data here. And by using the quarterly, it just really cleans up the chart, shows you big picture what's going on. And, I look at these buy and sell pivots. The idea being once we have prices breaking above and closing above that lowest price bar, calling that the buy pivot, and really for the market to rally a long way, you need to see a pivot. The market just can't go very far without one. So analysing the pivots that we've had, from there you can see a quarterly buy pivot in 2003. Got the quarterly sell pivot there, 2007. I've got a quarterly buy pivot there in 2009. There was actually a sell pivot here. Then we have a quarterly buy pivot here, and that is with a close above the lowest price. So, buy pivot there, sell pivot there. We can ignore that one. That's a quirk of the program. Another buy pivot there in early 16, and we can see a big sell pivot here on the quarterly, which was last quarter. And just quickly, the opportunities that arise when the market does turn down. For example, here we've got the crash in 08-09. So we had the big quarterly sell pivot, and you can see prices rallying up in that next quarter up into the selling pressure. So at the time, the market would have looked great rallying up there. But in relation to that quarterly sell pivot, you can see it's going up into the guts of that candle. And, the way I look at things, looking at the, midpoint buy zone of that and sell zone, really rallying up into that resistance area before turning back down and getting hammered. And that buy and sell zones, you'll have to go and look at my past videos. I don't want to take up too much time. And you can see here, if we just look at the price action where we are now, price is now rallying up into the top of that sell pivot candle. I've got the sell zone of that candle just here. And you can see prices heading up to the top of the sell zone. And really it's getting to that point where it's decision time. We're either going to be busting out above that quarterly pivot or above that high, that's the major point, up around 63.50, 6,400, I think it is. So a breakout above there, and we've got continuation. If we create a quarterly buy pivot, then it's all on again to the upside. And if we just look at the structure of this whole rally, we've got this big rally, sells off into the buy zone of the wave there. It then rallied to the midpoint, you can see. That's that blue one. Seeing resistance at the midpoint, back to the buy zone again, up into the sell zone here, back to the midpoint again. And this is where these levels are so important. You can see over this 20-year period, they've come into play again and again. And the most recent rally from 16 to 18, hitting the top of the sell zone of that whole wave up from 2003 to 2007, and we've seen the quarterly sell pivot from that point. So it is a spot where it really can sell off a lot from, but if it does break out to the upside, it can, really take off to threaten those all-time highs and continue on. And as I was saying earlier, just following the actual structure of it, this sell-off did not take out that previous low in 03, and this whole internal rally is constructive to the upside, so you have to accept that. But at this moment, we haven't broken below the previous highest low in the wave to the upside. So from that point of view, this market is still trending higher in that very big picture. And you'll see that when we have these rallies, it's pulled back pretty much to the midpoint of that wave, and then this next wave to the upside, this sell-off pulling back to around the midpoint. So a breakout above the high, can be quite bullish and a continuation of the whole trend. But while the quarterly sell pivot's in place, and you've seen what's happened in the past over and over again, it's been the beginning of a big sell-off. If we go all the way back to 2001, we've got this quarterly sell pivot there. The market's then rallied to the top of that sell pivot candle before selling off for a year. Have another one here rallying up, and then failure into the crash. We did have a little sell pivot here, which did see selling pressure. You can see the rally up into the top of that candle before selling off, but then finding support before taking off to the upside. And on this sell pivot as well, rallied up into the guts of it, selling off all the way back to the low of the candle to retest that low before rallying again. So from that point of view, very high strike rate that there's going to be selling pressure up in this area. And the way things are looking with property, etc., etc., earnings coming off pretty rapidly, and a lot of economic data coming in on the soft side worldwide. My thoughts are that any bullishness on the back of the China-US coming to some sort of deal may create a spike, but I think there will be bigger picture selling pressure. So this rally is going up into what will be very stiff resistance. So we're getting closer to crunch time. The market needs to make that decision whether it's strong enough to bust out above these levels here, which will create blue sky. And definitely if it does that, I can switch and become bullish, especially on a quarterly buy pivot, if it can close above the high of that candle from last quarter. And that price is what, 61.98. So I mean, if we close above 6200 at the end of March, then we have to turn bullish. But until that happens, the risk is to the downside, and the opportunity is to be looking for ways to gain exposure to that downside. And as I've explained before, the higher this goes, there's probably a pretty good probability we'll revisit the midpoint of that quarterly candle at least. And so the way I'd be looking at it is, can I be buying puts down around that level with quite a bit of time value, and then if we do have a reaction back to that midpoint, I would want to be buying calls against my puts, sell half my puts, take profit and buy calls with them, so that I can create a fairly cheap straddle and then make money whether the market rallies or falls from that point. So that would be my sort of method for looking at this. We don't know whether the market's going to blast off or fail. I personally think it's going to fail, but can we set up a position where it doesn't matter whether it finds support at that midpoint, or continues to sell off. And even though we may spend a lot of time in this candle, it could spend a couple of quarters thrashing around trying to decide what it wants to do. But yeah, failure under the low of that candle would be pretty bad and would see pretty sharp selling into the buy zone of this wave, which would be down around that 5,000 area, which again is the midpoint of this whole wave. So that would just be a revisit once again to the midpoint of the last 15 years trading, which would make a lot of sense, because you can see that it's revisited this midpoint over and over again. And that might be the last time we revisit that point, and then we could be off to the races again to the upside. But there would be plenty of money to be made in a move back to that 5,000 area over the next year or so. All right, that's it for today. I'll come back with more next week.